I want to welcome Michelle Goss to the program. Michelle, obviously it was a tough quarter. You've got nearly 1,200 stores and they were closed for half of the quarter. So, of course, it's no surprise that you saw a really tough sales number down 43.5%. Even with that surge in digital, it's just not enough to make up the difference. But you have about half of your stores reopened now. So I think everyone really wants to know, how are shoppers feeling? How are they reacting? Is it back to normal or even close?
Yes, Courtney. Well, it's great to see you. First, let me just add a little context. This quarter was extraordinarily difficult, as you mentioned, with half of our stores, all of our stores being closed for half the quarter. So that put tremendous pressure on our business. You know, as this unfolded, we set out to put forth two key priorities: protecting the safety of our people and our customers, and ensuring the financial viability of the company. And on the latter, as we closed out the quarter, we have $2 billion of cash on the balance sheet. We have added liquidity of another $500 million, and that's absolutely critical for us to navigate. Now, that being said, of course, things over time will normalize as our stores come back up online, because clearly our digital business, which is roughly about 25% of our business, is not enough to offset. So we are at 50% just as of yesterday. And I'd say the early indications are promising. We opened our first 50 stores the first week of May, and they did about 50% of the volume that we'd expect. That was with very little marketing, pretty much just opening the doors. And we've seen progressive improvement as we've now had them open a little over 2 weeks.
You noted on the conference call, you and your chief financial officer, that you've actually continued to see that acceleration online. Does that suggest to you that some of that behavior is permanent, that maybe shoppers that hadn't previously used your website as much are going to do that instead of going to the stores? And then how does that shift your cost structure if the cost of shipping was 10 times higher than normal during this time?
Yeah, well, I mean, our objective obviously is to have healthy and thriving channels across the board. So our store base, and we hope to have most of our stores open by mid to late June, and then have our digital business continue to grow, which has been a growth engine for the company over the last few years. We have seen some store-only customers with our stores closed move to digital, and we view that as a good thing. As you mentioned, we saw our business accelerate. Our digital sales for the month of April were 60%, and we've seen that even further accelerate in May. I really see them as complementary, not an either or. And we know our best shoppers are those that do shop us across multiple ways. And I think a good example of that is now our curbside pickup offering, which has continued to accelerate, and we'll keep that even as we open our stores.
Michelle, your format gets a lot of attention. You are a department store, but you're off mall for the most part, often in some cases freestanding and others in a strip center, so you don't actually have to go through the mall to access your stores, which may in some cases be a plus, but you're still a department store, and we've seen a lot of bankruptcies in that space, even just in the last couple weeks. Neiman Marcus, JCPenney, Stage Stores. Are you actively marketing to try to pick up those customers?
You know, it's a great question. And yes, we are. And I think there's a short-term opportunity and a longer-term opportunity. I do think in the short term, as we've done in the past, where we've seen stores that do close, we've taken the opportunity through local marketing efforts to really get after that business. And that has benefited us over time. And we have many examples of that. I do think over the longer term, we are positioned really well. Our stores are an asset. As you mentioned, they're off mall. 95% of our stores are off mall. That makes it really convenient. They're spacious, so they're naturally set up, I would say, for social distancing. We've layered on top of that a lot of all the latest and greatest health and safety measures to make sure that our customers and our associates feel really safe. So I think that's a key opportunity for us. We offer great value, both through how we show up in the market as well as our loyalty program, and that's been growing. We have more than 30 million members in our loyalty program, more than 65 million customers shop Kohl's. That was an all-time record as we ended up last year. And then I think our brand portfolio, we have fantastic and beloved national brands, iconic brands like Levi's, Nike, Under Armour, Adidas, Carter's, the list goes on, complemented with these really value-oriented proprietary brands. You know, and as we open up the doors, to the earlier point, we're in the early days, but, you know, we're seeing customers really excited to be back in our stores. Some were waiting at the door when they got word that we were opening up again. So I think all the indications for us that the sales are building, that digital is continuing, is that the relationship with the Kohl's customer as we sit here today is still very strong.
Before we let you go, you did mention your cash position, more than $2 billion. That's significantly more than at this time last year when it was around $700 million. I know you've tapped the revolvers. You went to the debt market with a $600 million offering. What are you going to do with that $2 billion? Do you intend to keep it on the balance sheet, or are you going to put it to work?
Well, in the immediate term, it is ensuring that we can navigate this highly unusual, unprecedented time. So we're encouraged by opening up our stores, but there's a lot to unfold over the course of the year. So first and foremost, we want to make sure that we have the cash we need to navigate really through anything that might come our way. Over time, we pride ourselves in always having a healthy balance sheet. We've been an investment grade company for more than 2 decades. And so we will go back to our capital priorities, which is to invest in the business, to reinstate the dividend, and over time pay down our debt as we have in past times.
Michelle Goss, thank you so much for being here with us to give us the update as Kohl's stores start to reopen. Michelle Goss, CEO of Kohl's.